Good evening, friends, and welcome to another live stream by the Option School. This is Pradeep Singla. Today, we'll be talking about uh, a very good option strategy, cash secured put option. And this is based on a real incident I had today and with my cousin. I just wanted to show what is the vulnerability of a small retail trader and how he understands things, especially in option trades. It's not easy to understand the option strategy, and it's not easy to understand uh, what are the pitfalls in an option strategy. So he might have seen some uh, video or must have seen something, and he was really excited about uh, this option strategy, which is known as cash secured put option. And I've talked to him, and then I said, okay, let me use this conversation in today's video so that it will be helpful to a lot of us, right? And yes, with his due permission, I am doing it. He's very close to me, so he doesn't mind whatever conversation I'm going to share with all of you today. Hopefully my voice is audible. Please confirm if my voice is audible. Good evening to all of you, and welcome to another live stream. Hopefully my voice is audible. Can somebody confirm if my voice is audible? I think Mr. Vijay has confirmed that the voice is audible. And yes, if you're coming first time to this channel, please go ahead and press that subscribe button, and do not forget to press that bell icon also, so that whenever we are doing a video, you should get a notification, right? Generally on all working days at 9 p.m. we are doing a live stream, and most of the times we are talking about options and option trading strategies and topics related to most of the time are related to options only, right? So if you're not a subscriber, please go ahead, press that subscribe button, and you know what to do in case you are already a subscriber. If you're already a subscriber, I think most of you have already done. I think some of you have even written the comments also that okay, I've already pressed like, I've already pressed like. And today one of my close person told me that okay, why are you asking for likes? We in any case will do the likes. I said okay, I will stop doing that. But I don't know, when you come to YouTube, then the YouTube genie gets into it, and you start doing all those things which are mandatory on YouTube. So keep on requesting people for increasing the likes, and that is the real encouragement for a YouTube creator, right? Okay, thanks to all of you for doing likes, and don't forget to like the video. And again, today we are like 2 3 of uh, our people, Pawan and Nifty Trade and Kiran. I think we are missing them from few days. Maybe they are busy somewhere, and we'll come back whenever they are free, right? So okay, let us start. And this started with a conversation with one of my very close cousins. Thanks, Mr. Sharma. And today I got a call from him, and he called me, and he wanted to share his great strategy. And we have conversations many times, and on especially on option trades or some option trading strategies. And generally in the end, it happens so that I will always tell him why you're taking this much of risk, why you're not hedging your strategy. So all these things always happen. And today he was really excited, and he said, I want to share uh, this great strategy with you, and you confirm whether you like it or not. I said okay, go ahead. And so he said, I have done a cash secured put in Reliance. I said okay, so what exactly you have done? He said, I have sold a 1300 put in rupees 20. Whether he has sold or whether he was planning to sell, I really don't know. I sold 1300 put in rupees 20, and I have 6.5 lakh additional money, and in case it goes to 1300, I will buy the stock with cash, and this is something known as cash secured put. And I just listened to him patiently, and he said, I said okay, how will you buy? He said, I have 6.5 lakh rupees as additional money, and you can calculate the lot size of Reliance is 500 units, and if the share goes to 1300, 1300 into 500 will be something like 6.5 lakh money. And in case it goes to 1300, I'll buy the stock with the cash. And in case it doesn't go to 1300, the stock is I think more than 1400 or something like that right now. And in case it doesn't go to 1300, I will make a very good profit of 10,000 rupees, right? I said, yes, this is a great strategy, and you have really understood cash secured put very well. But what is your total investment? I just wanted to ask him what is his total investment, because he has kept 6.5 lakhs for purchasing the stocks, and he must have spent some money in selling the put also, which is roughly around 1.5 lakhs. He said around 8 lakhs. I said fantastic. So you are keeping 8 lakh rupees for this trade. And what if Reliance goes to 1300? I asked him. He really got irritated on this, that why the hell I am asking this question, whether I have not understood the strategy or well. He said, I'll buy shares. I think you have not understood the plan. I said, okay, I have understood the plan. And my next question was, what would be my next question? Can anybody tell me what would have been my next question? And that almost ended our conversation. He has done his homework, he has learned the strategy very well, and he said, if Reliance goes to 1300, I will buy Reliance shares and I will get a huge discount. And that's the strategy, which is known as cash secured put. I am selling a put and I am buying the share in cash, right? Okay, Mr. Shetty says, what is the ROI in 8 lakh rupees? You are earning 10,000 rupees, just more than 1%, or maybe more than 1.23%. Yes, Mr. Sharma. I asked him, once you buy Reliance shares, what will happen if Reliance goes to 1200? Right? What will happen if stock goes to 1200? What will happen if this Reliance stock goes to, let's say, 1100? And when I asked him this question, there was a complete silence. Complete silence. He has seen some material or something on cash secured put, and he was super excited about it, and he loves Reliance as a share, and he had some money. So he said, let me go ahead and do this cash secured put. And just to confirm with me, maybe he thinks that, okay, I know a little bit of options. So he confirmed with me, and when I asked him this question, there was a total silence. He didn't know what if Reliance goes to 1200, what if Reliance goes to 800 or 700, whatever. That part of the strategy he has never even thought. And that is what happens to most of us. We will create a trade, we'll create a strategy thinking whatever we are thinking is great. And beyond a point, we are not at all thinking about the strategy. We are not at all thinking about the consequences of the kind of trade we are creating. We think that, okay, this stock will not go up from this level, this stock will not go below this level, and accordingly we create our trades, right? And then we don't even bother to think what will happen if these limits, whatever limits we have psychologically putting, that, oh, this is a very good stock, this will not go below this is a very good stock, this is a very bad stock, this will not go above this, right? So one more cash secure put, right? So you keep on doing a lot of things, right? So it was a complete silence, and I asked him only one thing: you have cash secured the put, you have kept a lot of cash for securing that put, but who will secure your cash? Who will secure the stock which you are going to buy? And this is something all traders need to understand. I am getting this kind of things, that, okay, I'm doing this. I think in our channel also, there was one of the participants, he said, I have done a cash secured put for December Nifty 5000 or 6000, something like that. And most of us start thinking, when we see some over glorified material on this, that, okay, cash secured put means either market will go up, I will make money, and if market will not go up, I will buy the stock, that's it, and after that things are over. It's not like that. Things are not over after that. I think, Mr. Sharma, you have already seen our material. Cash secured put is just a fancy name for selling naked put. We also cover naked put in our workshop, but naked put strategy is that an independent strategy? It's not an independent strategy. It's a fancy name for naked put, and naked put is not an independent strategy. It can be part of something bigger. It can be part of overall scheme of things, where you're trying to buy some stocks, and then you know what to do with that stocks. maybe you're trying to do covered call with the stock, and you also know how to control your risk in that stock, right? So doing a cash secured put, and once we have purchased the share, the story doesn't end at all there. There are things to be done after that also, right? There are things to be done after that also, once you have procured the shares. If you have not procured the shares, that's fantastic. Every time you are earning money, and but once you have completed the strategy, which means you have kept the cash to buy the share and you have purchased the share, risk has then started. It has not ended. The game has started at that time, and that is the understanding one need to have when one is trying to pick up material available here and there and trying to execute those things. This happens with all of us. We see something and we find really that this is really a glorified thing, and we jump into those things, and then ultimately later on we come to know that okay, in what kind of trade we have put ourselves in, right? So risk has started, it has not ended once we have purchased shares, right? Now you need to safeguard your capital. Now you must buy a put to prevent your capital erosion. And with that, since you see I became very very preachy, and my cousin said I'll call you in half an hour. And this was the first part of our conversation. And once you like this video, I will give you the second part of conversation. Since you are liking this video, it will give me few seconds to have a sip of water. So go ahead and like the video so that I can tell you what he did after he called me after half an hour. Thanks for, okay, there was some of you accepted my request of liking the video. Most of you still don't think that okay, this is the right time to like the video. Maybe at a later stage, if you feel, please go ahead and like the video. That's the real encouragement for any YouTube video creator to come every day, that okay, his work is getting like, whether you like it or not, please go ahead and like, right? If buying shares in cash, Mr. Sharma says, but why FIs will buy in cash market? So there are a lot of questions which it's a method, yes, definitely, but then it is not the end of the strategy. It is just the beginning of the strategy. It is again half baked. That okay, if the share will go up, I will buy it. I will make profit, and if the share will go down, I will buy the shares. What after that? You need to think beyond that also, right? You need to think beyond that also. That yes, you have purchased the shares. Now what after that? He said, I'll call you in half an hour. I said, most welcome, dear. You can call me after half an hour. And then he called me after half an hour. He said, now I have a better plan. I said, okay, please share with me also what is your better plan so that I can also use that plan. He said, since you said the stock can fall, I will not sell 1300 put. I will sell 1000 put. I don't think the stock can go to 1000. I said, okay, this seems to be a slightly better plan because stock is somewhere around 1450 or something. So chances that stock will fall by 40-45% or 40% are less. So this seems to be less risky. Go ahead and you can do that. But can I know at what premium you are selling that? He said, I can sell it at rupees 3. If it doesn't fall, I'll make very neat and clean 1500 rupees in the trade, because the lot size is 500. This 3 rupees into 500, 1500 will be my profit, right? I just then asked him, what if we keep 8 lakh rupees, because his investment is 8 lakh rupees for selling a put, 1.5 lakhs, he's keeping 6.5 lakhs for his cash secured put. What if we keep 8 lakhs in FD for 1 month? And then we calculated that okay, even if the bank is giving me 6% a year, 6% a year is almost all the banks are offering, right? So that means 0.5% per month roughly, and if you keep it at 0.5% interest, we will get 4000 rupees on this 8 lakhs. So question to all of you, what is better? Can you all guide my cousin that okay, what he should do? Should he keep his money in a bank fixed deposit, or should he do a cash secured put of Reliance. He could have hedged it by buying one more put below 1300. He is already selling a put, and then he will buy a put, means he will again give some money. That is the second part. But that, you see, most of the traders will just listen to the cash secured put strategy, and they can see hundreds of videos and Facebook and things like that, and then they will get fascinated by cash secured put, and they will jump into cash secured put, and you do not know what are the consequences of buying these shares, right? So in this case, as all of you are saying, Mr. Mehul Patel is saying, Mr. Kamal Bansal is saying, Mr. Linga Kappa is saying, Mr. Vijay is saying, that bank FD makes much more sense in this case, right? Where you are getting 4,000 rupees for keeping your money for 1 month, and in this case, even if you are selling a 10,000 put, still, is it a risk-free investment? It is still not a risk-free investment, right? It is still not a risk-free investment. He should keep doing iron condors. This you know, Mr. KKS, right? He should attend toss workshops. Thanks, Dr. Right, that's the whole point. So people are getting fascinated with a lot of option strategies. You get fascinated with a lot of trades which are very well explained, but then it's our own hard-earned money, and we need to safeguard it. We need to know the consequences of whatever trades we are doing. What are the outer limits? As I said yesterday also, what are the outer limits for any trade? How long it will be safe, and what is the maximum loss any trade can give? So if any trade, this is my rule right from maybe last 5 years. Any trade, if it looks too good, then there must be something, that means I am missing something. So at any stage, if you feel okay, this trade is foolproof and I must do this trade, then definitely you need to cross check it with some of your friends, some of your colleagues, or any other trader. Are you missing an important point in that concept? Are you missing that important point in that concept? If you are missing that important point in the concept, it may so happen that okay, you are very excited about the trade, but then uh, trade may not be that great. There are always some loopholes in the trade which will really kill the trade in case things go haywire, and definitely things will go haywire if you do not know what is the problem in that, right? So what is missing now is that you people are not at all helping me in liking this video. Go ahead and like this video so that we can have our target. I do not want to have a very long video today. If you have any questions, please go ahead, and otherwise I will say what are the two lessons I have learned from today's conversation, right? If assignment happens, Mr. Chatterjee says in cash secured put, underlying goes to go down, even subsequent covered call cannot safeguard the capital erosion. That's the whole point. You have said that okay, I have done a cash secured put as if it's a very great trade, but what if after doing the cash secured put also the stock is going down? So you need to safeguard that. Your problems have not ended after you have completed the cash secured put. Your problems have started, and people very easily say that okay, I'm doing a cash secured put, I'm doing a cash secured put. It's just a naked put. You're selling a naked put and you're keeping cash for securing that naked put, but then who will secure your cash which you have invested in buying that share? We need to have that plan also ready with us if we are doing this kind of a trade. That is the whole point. So in any trade, we need to think across all the angles, that what is going to happen in case this happens, what is going to happen in case this happens, right? So what are the two lessons I have learned from this conversation? And they're very I'll say they are very simple lessons. I said okay, let me share with you, but today I think people are totally adamant, they don't want to like the video. Okay, maybe I need to take a break for a few days so that uh, people start again liking the videos, right? And if you're seeing the conversation on in your mobile, keep the conversation off for a second. Go ahead and press the like button here. Come on, it's not a cash secured put. It doesn't require any cash. You just need to break inertia and press that like button. So first lesson is half baked knowledge is very dangerous. We need not just copy and paste and do things just seeing this person, that person, this trade, that trade. Half baked knowledge is very, very dangerous. Remember, first time when you had losses in stock markets, first time, most of the traders, when they have losses in stock markets, are when they are trading on hearsay. They have just listened to a conversation of their colleagues, they have listened to a conversation of their relative, they have listened to somebody, they have just done a eavesdropping kind of a thing, and thinking, yes, they have got a very good tip, and I am very smart now, and gone ahead with the trade, and that is the trade which has given you a big loss, right? Half baked knowledge is always very dangerous. All that glitters is not gold at all, right? So this is the first lesson all of us need to learn from stock markets, and from whatever things we follow on news, on media, on channel, on YouTube. I think YouTube is one of the most dangerous things, right? People throw strategies left, right, and center, and they can be just 25% part of the strategy. And as a newbie, I really get attracted to those things and keep on trading based on that, and that is really dangerous, right? Second thing, it shows how vulnerable our small poor trader is, because the know-how of actual trades is so low, it's so low. In spite of learning some trading strategies from here and there, a retail trader is not able, unless and until he is really trained, he is not able to think the pros and cons of any strategy to the extent he should be thinking. That is the second biggest problem, that okay, the trader is really vulnerable. And I will say, do not become a guinea pig. If you want, if you have learned some strategy on any social media, on Twitter, on Telegram, on Facebook, on YouTube, don't just go ahead and invest your money. Do a lot of paper study on that. They are good mediums for learning, but if you do that proper learning, right? So don't become a guinea pig for somebody's strategies and start losing your money. Okay, let me take some. Dr. Rajan says created a bear put spread by buying 86 put and selling 79 put. Oh my God, 86 and 79. You're giving only 17 rupees, Dr. Rajan. There cannot be a better trade than this. Both legs in profit. I couldn't understand the trade. How is it possible that you have purchased 86 in 89 and sold 79 in 72? 700 points distance you have done in only 17 rupees. I don't know if these kind of trades are still available. I should invest 100% of my capital in these kind of trades. If now I sell 8400 put, may it shows maximum profit 16,000, maximum loss 0. Is it possible? Now, in case we have purchased 8600 put, first thing is, let correct me if I am reading it correct, that you are buying 8600 put in 89 rupees and selling 7900 put in 72 rupees. As far as I know, Dr. Rajan, if they are of both are of same expiries, I don't think this kind of a trade is possible. Is there a typing error here, or maybe both the trades are of different series, they are of different expiries? Then this kind of a trade may be possible. Maybe you have purchased 8600 of 14th May and sold 7900 of 28th May. I really don't know. And secondly, only then I will be able to comment. Secondly, whenever you are putting these kind of trades on Opstra, always put all the strike prices first. And if there is a difference of series, let us say one is of 14th May, one is of 7th May, or one is of 28th May, or one is of 25th June, if there is a difference of series, then the profit and loss is calculated based on the nearest expiry. So any calculator, whether it's Opstra or any option calculator, it will not be able to calculate properly for the far expiries. What will happen? They are showing you what will happen on 7th of May if the trade is having 7th of May. If the trade is having, let us say, 14th of May, so it will be giving you the picture up to 14th of May only. So many times this mistake has been done by us also. We will put in some strike prices in Opstra, and if there are difference of expiries, then it will be the real trade was May and expiry, right? All the trades, Dr. Rajan, all the trades are May and expiry. Then this kind of a trade is not possible. Maybe some issue in there. And if you sell 8400, if you are selling two puts and you are buying one put, there cannot be a scenario when there is no loss. There is zero loss. At all scenarios, it will be zero loss. That is not possible. I will suggest you put your trade again in Opstra, and if they are of same series, just reset the previous trade, put your trade again, and it will go you the real picture. Many times we have seen in Opstra also the wrong information is passed because some calculation mistakes are done. So put it again. Any trade which is real, which is maximum zero loss, where you have sold two puts and purchased one put, is impossible. Right? At some levels, it should give you infinite loss or unlimited loss. Right? What is that understanding, Mr. Patel? If we do bull put spread and we get a loss, uh, then we can buy only those number of shares which is equivalent to loss, so that we don't have to keep big amount of cash. Then what will you do with the stocks? The main question is, yes, again the same story. You have taken care of your loss in the bull put and you have purchased some shares, and obviously when you are doing a bull put, your losses will be in multiples of lot size. Right, your loss will be in the multiple of lot size. So if you buy, let us say, even one lot, and what after that? It's the same story what I have told you today. What after that? You need to protect those shares what you have purchased. If you have already lost money in bull put spread, that means the stock is going down, and you have lost money on the bull put spread. Now you have purchased the cash equivalent of the stock, and now the stock can again go down. Right. So what is the protection of that cash? That is important. Uh, 89 put sold and bought 88 put for yesterday, Mr. Vijay. So what is the credit you have received? It should not be more than 10 rupees, right? But yes, you can get that 5-10 rupees, because 89 must be sold at 10-11 rupees or 20 rupees. 88 must be 10 rupees. So these kind of trades are very low value trades. But yes, you see the risk is 90 rupees. If you have got a credit of 10 rupees, and the way markets are open nowadays, they can open gap up by 100 point 300 points and gap down by 300 400 points, right? So a risk, if your credit is 10 rupees, Mr. Vijay, I don't think it will be more than that. I've not seen the strike prices. Your maximum loss can be 90 rupees. Why should we do this trade? My only question is, why should we do this trade today? Tomorrow morning also we can do this, right? So again the question is, why we are taking the trade so close to expiry. The trades become really really dangerous, and markets, you know how they behave nowadays. If you see previous few days, there are big gap ups and big gap downs. Only today was the day when the opening level of market from the previous closing level was pretty normal. Otherwise, if you see technical charts, there are huge gaps in opening, right? Real trade of May end, maybe you have done it at different times, Mr. Rajan. Otherwise, 86 and 79 cannot have a difference of only 17 rupees, right? Uh, 86 was bought in April, so that is over, sir. Dr. Rajan, that put is already over. We have already seen April expiry, right? So what Mr. Anko is Opstra? Opstra is a calculator. If you go there, you can put in your positions and it will give you what are the outer limits of your position, what is your maximum loss, what is your maximum profit, and what is the range between which your trade is positive, right? What is your take? I think he should cover buying put and convert later to a covered call. What is that, Mr. Mittal? I couldn't get your question. If you're Are you talking about somebody else's post, or you have written some question? Because there is so much of gap between questions. What we are doing. Okay, Mr. Mahendra Chaudhary says SGX is now down by 168. Okay, few hours back, I think I've seen SGX. It was down by around 60-70 points, and now it is down by 168. What about Mr. Mahendra Chaudhary? What about Dow Jones? If Dow Jones is also down, and but we need not worry, right? Why should we worry? Because tomorrow morning scene can be totally different. So many times we have seen that, okay, when we sleep things are different, and when we wake up things are totally different. Tomorrow market closed? I don't think so, Dr. Gadam. Markets are not closed today. Yes, there is some festival based on which there are some holiday, but markets are working today. Tomorrow is a weekly expiry, right? Markets are not at all closed, Dr. Gadam. So go ahead and trade the markets left, right, and center without taking much of a risk, right? It's not closed, doctor. Maybe because of holidays, your clinics are closed and whatever is happening. If Dow Jones is down by 55 points, Mr. Mahendra Chaudhary, why SGX is then giving a fake number of 168? I don't think it will be down that much. Tomorrow morning, we will be able to cover most of the distance. Let's see what happens. In any case, we do not have any unhedged trades, and I love doing all these hedge trades because it doesn't give you, it gives you peace of mind and it gives you a good sleep during night. If your trades are hedged, you know this is my maximum possible problem, and I can always take care of that, right? So our next scheduled workshop is on 9th and 10th of May, wherein we are teaching a lot of hedge trading strategies which can all the traders can really benefit, not only now but especially from 1st June, when the margin requirements will be getting reduced, right? May expiry 86 put in April, sold 79 few days back. That's okay. If you have done at different times, obviously you have done a great trade. You can just sit back and relax. Why you are in a hurry to book profit? If market goes down, this trade can give you really good profit, right? Mr. Rangacharya says premiums will come down with reduction of margin, but premium depend upon volatility and other factors. So what are the other factors, sir? Right, other factor can be what is the kind of investment you're doing. You see, as I always say, there are two kinds of traders: market makers and market takers. Now market makers are people who are selling options. So option seller will not sell his option unless and until he is getting a premium with respect to what is his investment. If he is getting a sufficient premium with respect to his investment, only then he will sell option. Otherwise he will wait, he will remove his bid. Then buyer has to increase the bid and ask the seller that, are you okay with this price? Then the seller say, my investment is, let us say, 1 lakh rupees. I need minimum this much of premium, otherwise I am not going to sell. So definitely margins also play a role, but again we need to understand these things will open up only on 1st June, and it will take 5-10 days for the markets to settle, because margins are going to reduce not for any trades. Margins are going to be reduced for only hedge trades, right? Banks may be closed, but markets are open. Any workshops planned in June, July? We will announce that, Mr. Kulkarni. As of now, only this 9th and 10th May workshop we have announced. After that, we may have some assignments with uh, somebody else also. So definitely there will be some workshop in June also. Premium is calculated based on, Mr. Chatterjee says, Black-Scholes formula, uh, right? How can premium change based on margin? So that is the question for the day. Okay, great question, Mr. Soumya. He is saying, if you see Black-Scholes formula, most of you know that there are 4-5 inputs. You are giving an input of how many days to expire, what is the spot price, what is the strike price, interest rate is 10%, and what is the IV, right? So you are giving these 5 inputs in Black-Scholes model. Then how come the premium will change based on margin? Very good, decent question. I will say, let all of you answer this, Mr. Sharma. This is the question for the day, right? Excellent question. I'll request Mr. Soumya, you can put that question in the comment section also, and let me see how many of us can answer this question, right? And answer is hidden in the question itself. But anyway, let us see how many of this group is really, as I always say, expert in options. So many of you will find the answers. Let me see who gives the correct answer for Mr. Soumya Chatterjee's question. And I'll request Mr. Soumya Chatterjee, once this video is uploaded, maybe in next 5 minutes, please upload this question on the comment section, right? Let us do that. And because option pricing is based on Black-Scholes model, there are only 5 inputs. We are not inputting a margin there, right? So how will the answer come, right? uh, so if you want to join our workshop, we'll give you the contact numbers. And if you want to join our membership, you can participate in live chats, exclusive videos. That's a gold membership. Then you can connect to us on WhatsApp with our diamond membership for asking queries on your trades. And we share our trades and adjustments in our smart hedges membership. You can join any of these uh, memberships, right? And if you want to join our workshop, you can contact us on these numbers, and you can write to us at info@theoptionschool.in. Do not forget to like the video. Today we are slightly short of likes. Maybe Mr. Sharma made a lone attempt. Nifty Trader is not there. Mr. Deepak and Mr. Pawan is also not there. Mr. Kiran, these people always push all of us for likes. As of now, we are still lagging behind with 13, 14 likes, but hopefully at later stage all of you will decide and you will like, right? ROI will be less as investment is also less after June. How is that possible, Mr. Ratan? ROI will be less. ROI is return on investment is reduced, premium is reduced, so ROI remains same, right? So ROI is in percentage. So if you are investing 2 lakh rupees, earning 2000 rupees is same as investing 1 lakh rupee, earning 1000 rupees. So return on investment will more or less same, or it should go up. We missed you, Deepak ji, and that is why you are responsible for today's less likes. Right? You are here, but I have not seen any of your posts, and you have not asked anybody to like, so that is why people have not liked the video. We have got only 88 likes. We are 12 short of our target of 100, right? And excellent question asked by Mr. Soumya Chatterjee. Request to him, please post this question in the comment section, and I want answers from all of you, whatever is your understanding. And finally, once we have let us say 20-25 replies, I will definitely answer that question on the comment section itself, right? Margin reduction is boon to brokers, their brokerage will shoot up. Yes, that is a valid point, Mr. Rangacharya, because now in 2 lakh rupees I may be doing one trade, then in 2 lakh rupees I will be doing four trades. Obviously, the brokerage will become four times, right? Sellers will be ready to sell at lower premiums. That's okay, Mr. SM, but what about Black and Scholes model? Why, where is it including the margin, right? Share this video to somebody whom you think it will be useful. Do write your comments. Mr. Soumya is going to ask us the excellent question, and my request is if you answer that question, that will be one of the things. If otherwise you have any other questions, any other feedback, please feel free to write it in the comment section. We try to answer all the comments, right? And if you are not subscribed to our channel, please go ahead and subscribe to this channel. If you really want to do some serious business in options trading, you must subscribe to this channel and listen to and discuss the views of all these expert. This is one of the best expert groups in India, right? Bid ask spread may reduce, so that doesn't mean the price should go up and down. If spread is reducing, that means liquidity is increasing, right? And thanks Deepak ji. Definitely we'll get much more likes. We are sitting at 90. No issue. We'll definitely complete that 100 and 200, right? Will it decrease margins for intraday also? Another very good question. Margins will be reduced for everything, right? But again, it is for hedge strategies, and generally you don't see many people doing hedge strategies for intraday, Mr. Lucas. So thanks to all of you for coming, and good night. And I'll be waiting for Mr. Soumya's question on comment section, and then I will be waiting for your answers. Let us have an active discussion on comment section, and I will give my comments on each and every answer to this question, why that answer is right or why that answer is not right. Let us have a good another chat session on comment section. Thanks to all of you for coming. See you tomorrow at 9. Thank you. Have a great day. Have a safe expiry day. I have not done any option chain analysis today because markets are totally dependent on the opening of gap up and gap down is totally dependent on news flow and Dow Jones. So any analysis would not hold valid very seriously. But yes, it makes sense to analyze the markets at around 9:30 when the markets open. If possible, we'll do that, but still I think it would be very difficult, right? Thanks to all of you for coming. See you tomorrow. Have a safe expiry day and have a great day. Thank you.